All righty, folks, we got to talk to Mr. Dan Bird. We're going to review the jobs number from last week. We'll talk about CPI and PPI next week. We'll talk about the Fed rate cut. Will we get it? Will we not? What's going to happen in 2025? We'll talk about the money show. We'll even touch on Bitcoin to see what the charts are telling us. Mr. Bird, how you doing?
I'm doing well. How about you? Only 2.5 weeks till Christmas. Can you believe it?
I had not thought about that. You're absolutely right. 2.5 weeks till Christmas. This year's
Mhm.
almost over, man. What the heck? How'd that happen?
It's almost over. I know, it just doesn't stop. Keep on going.
Doesn't stop. So the audience is curious. What are you seeing in the market? Are we going to get that Santa Claus rally? The Trump pump, as people are now calling it, seems to be in full force. What say you?
I think we will. It was interesting at the Money Show. There were lots of interesting opinions backed up by their own data, and
Mm.
interesting how the data can change depending on your
Yeah,
perspective.
no. So I'm curious. The Money Show. If you were to just guesstimate bulls versus bears, negative versus positive on 2025, what was the rough percentage? Just a wild guess.
So, so you have to separate the attendees from the presenters.
Fair.
All
Okay.
right. So, from the attendees' perspective, here was the most telling survey question. Question was asked of the audience: How many? And there are probably, I would say, 400 people in the
Okay.
audience.
Decent size. Yeah.
Um, so the question was, how many people here think there'll be a recession next year?
Okay.
And there were probably 5 people that raised their hand.
Wow.
I
Okay.
was I
Telling.
was one of them. I was one of them, by the way.
Okay.
And in talking to John Carter, I went to his session.
Yeah.
He's a trader that I really respect. Um, he mentioned it in his session. He goes, it was unbelievable when that question was asked. I looked out in the audience. There were probably 5 people that raised their hand because that tells you that everyone's bullish.
Yeah.
Everybody thinks the market's going up. Everybody thinks, we're not going to have a recession, that we're in a Goldilocks era and it's never going to go down again.
Deregulation, tax cuts. Yeah. Yeah.
I
I'm
mean,
not, I'm not making a recession call. I've been wrong twice. I'm not going to go for three. I'm not going to go wrong again.
I'm still saying we're going to have one.
I like it. I
But
like it.
like I've always said from the very beginning, and I've been saying this for what, almost a year, maybe.
Probably. Yeah.
If and when we have one, it'll be short and shallow.
Correct. Yeah. Yeah.
So we'll see. But he made a point in his session saying that just shows you how bullish everybody is. Now, he also did a presentation. He was actually the opening presentation on the first day, and he was pretty bullish too.
Hmm.
He said he thinks that this bullish period, and he talked about the 17-year cycles going back to 1776. He says
Hmm.
17-year cycles would say that we will have one next year, 2025. We had one in 2008,
Mm-hmm.
right? So that would put us basically in 2025. But he said he thinks this is going to be one of those periods where it's going to get extended, and he doesn't think it will stop until 2027,
Okay.
the
Hmm.
bull market. All right. So
Right.
we're talking about the stock market, not the economy.
Correct.
All right. However, and mostly most of the presenters were in that camp.
Hmm.
It went all the way from extremely bullish from somebody like Dan Ives, who
Hmm.
was pound the table, technology is king. We're in early innings. We might be in the third inning, and technology is going to carry us forward. And AI and all of the AI related companies are just going to keep on going up. And he says that they will double within the next 2 years.
Wow. That's a
So
bold
he's
call.
talking about the Magnificent Seven and other ones in
Mm-hmm.
that space. So they're going to double. So he was the most bullish of all of them. And then on the other side, you had guys Jim Bianco,
Hmm.
who has been
Sure.
on NBC,
Yep.
CNBC. Um, he was on the opposite side. Now he's a
Hmm.
he's a bond guy, and he says that the debt is going to kill us, and the bond vigilantes is what's going to stop, which is what I've said too, is what's going to stop the spending.
Yeah.
They're going to push rates up so high that the whole economy will crack, and next
Hmm.
year we'll be in a deep recession.
That's what he was saying. He's calling for a deep recession
Yeah, so he's on the
2025.
opposite end.
Okay. All right.
And afterwards, I met with him in a little meet and greet thing, and I asked him what we'll look at today. I asked him about the base effect.
Yep.
I said, well, how do you explain the base effect that just by math implies it's going to be below 2%? And he didn't have an answer. He didn't. I don't think he really understood what I was asking him. I
Ah,
was kind of surprised.
right. Okay.
So
All right.
he tried to dance around it, but he didn't come out and say, "Oh, you're right." You know, it was almost like he didn't understand the question.
Yeah. Well, he's
I
probably
don't
not
know.
used to having questions like that from audio. I'm sure he's used to more simplistic questions.
Well,
That's a
yeah. I
pretty
mean, most of the
detailed.
people there weren't real, you
Yeah.
know, in tune with the markets.
Yeah.
They were basically there for the presenters to tell them what to buy.
Yeah. Yeah.
So,
Cheerleaders and what to do with their money. Yeah. Very, very
right.
cool. Well, let's what'd you think of the jobs number? Jobs number came in better than expected. Also, the last 2 months were not revised down. Yes, folks, they didn't go down this
Uh,
time. They both
They
went
went up.
up.
That's what I said
So
last week when we had this talk.
yes, you
And you
did.
said we may be below zero for the first
I
time.
did. I said we might go
I said
negative.
it could be revised up.
And you were right once again.
And that's
Nailed
what
it.
happened.
There you
Yeah.
go. There you go. Well, I'm curious. We do have CPI coming out. Last week
Yes,
we
we
talked
do.
about the commodities. That was in food. Food's at a record high, right? At least
Yeah,
for the last 12
food has
months.
been
It's
ramping up. I didn't look at under the covers because the biggest piece of that is cocoa,
cocoa, yeah.
but I don't know if that's what carried it or not. I don't know if there are other components that carried it higher too.
Yeah, I read an article last week talking about food costs in general. I mean, if Chipotle had to reply or respond and raise prices 2% because,
Hmm.
in like protein, right? Protein's costing more and more. So, yeah,
Right.
this inflation thing might not be licked. We might repeat the 80s where the Fed thought they were winning, cut, it came back, had to raise. I mean, it could happen.
By the way, I don't know if you know this, but I read an
Mhm.
article. Do you know who Smithfield Food is?
Yeah.
You ever heard of them?
Yep. Hmm.
So they are a pork
Yep.
producer, basically bacon,
Yeah.
um, and they are the number one pork producer in the world. Do you know who owns them?
No. Don't know.
China.
Really?
Yeah,
I did not know that. Okay.
the Chinese own all of our bacon.
Oh no. Bacon. Okay.
Yeah, it was an interesting article because they talked about Smithfield and how they went out and started buying up all the other pork producers
Hmm.
until they became basically almost cornered the market on pork. And
Okay.
then the Chinese came in and bought them.
Ah. Okay.
So
I will look that up.
yeah, that's interesting. And farmland is another interesting area.
Yeah. Farmland. Yes. Yep.
So we'll see. But it was an interesting show. I learned some good stuff. I'll talk about it on my YouTube channel. I didn't do the YouTube for the last 2 days, Thursday and Friday, because I was at the show.
Yeah.
And I learned some interesting stuff, which I'm going to cover tomorrow, Monday, in the YouTube channel.
Very cool. Well,
So
let's talk about it all. Let's bring up the charts, look at where the market's at. Let's
yep.
take a gander. It's
Yeah,
CPI, the base effect, all
we'll
that.
look at the jobs first, and I actually created something based on what you mentioned last week
Okay.
about continuing claims
Yes.
versus initial claims,
That's the thing to watch, in my opinion.
and that's something that was talked about too at the show. So here's my website for anyone interested: breakpointtrading.net, and the newsletter, free newsletter, comes out every Saturday usually. It's right in this little box right there. I'm going to actually use some of that today. The YouTube channel, by the way, is also right on the same page. So anybody can get to it. Just go to breakpointtrading.net. It's right in the upper right-hand corner.
Cool.
And you can click on that. If we go back to the home page for a second, one thing that I do every day is I create this market bias chart.
Hmm.
And it's basically a combination of all the different segments of the market. And it just kind of consolidates it all together and then charts it, basically.
Mm-hmm.
And you can see what happened on Friday.
Yeah.
It started to trend above the line, and Friday it dropped considerably. So if we go over and look at it, it'll show you the pieces that changed each day. So transportation and utilities turned bearish. Utilities, that's utilities there, turned bearish.
Hmm.
This is transportation here, turned bearish. Transportation versus utilities. So it's all around utilities and transportation primarily. Steel also went bearish. Uranium and mining all turned bearish. But if we look at, like, let's look at transportation over here. The charts are on the left-hand side. So you can see there's transportation. So definitely going down. So there's the crossover right there where the 5 crosses the 21. So that's the short-term signal. The medium term is when the 21 crosses the 50, which is down here, and it may start to head that way too. But in general, I mean, everything else looks pretty bullish. But if you look at the colors at the top of this is day over day, week over week. And just every day, these, I update this. So you can see we went through a bullish period, and now we're kind of starting to go into kind of a little bearish period right now, which is in line with next week is usually the worst week of December. December is usually the best week of the year. The worst week of December is next week.
Okay.
So it could be choppy next week until we get into the last 2 weeks, which is where the market starts to take off and where the Santa Claus rally begins and all of that.
Okay.
So, and also we've got options expiration the week after that too, which just so happens to be the same 2 days after the Fed meeting.
Oh,
we have options expiration. So that's going to be a very volatile week. So the next 2 weeks could be pretty choppy.
Okay.
So just something to watch. This, this will change every day. These are daily points right here. So we'll see on Monday what that looks like. But you can see in general, all of the indexes are very bullish. The S&P, the Dow, the only one that started to roll over is the Dow, which is right there. Started to go down. S&P looks very strong, made new high again. So it's continuing to go up. And one thing that John Carter said was, he said, the market is very overbought. He said, most people think overbought means you should short it and sell everything and get out. He goes, but the way I look at overbought, he said, that tells me that everything is in demand.
Okay.
Everybody wants all this stuff. So it can stay overbought for a long time. And I think it's going to continue to the end of the year. I think we'll probably have, it may be a little choppy next week. And then the end of the year, I think we're going to rally. I'll go to the newsletter after I look at the jobs number.
Okay.
So I added this one right here, unemployment rate with initial claims versus continuing claims.
Oh, very nice.
Based on our conversation last week. And this was something that was mentioned also, because I asked, in fact, Jim Bianco, I asked him, I said, the initial claims came down, even though the unemployment rate ticked up a little bit. Because, but you got to look at continuing claims too.
Yes.
Because continuing claims, if they continue and keep going up. And then I asked him, I said, well, at some point, those just run out, right? People out of a job and out of money. So what this chart on the top is the unemployment rate. You can see it ticked up to 4.2 right there. And then the blue is initial claims and the red is continuing claims.
Got it.
So now we can see that, yes, continuing claims are slowly moving higher, even though initial claims are going lower.
Yeah. And this is my big concern for 2025. Again, I'm of the ilk that the unemployment rate could stay below 5%, and yet continuing claims could go up, because I think what we might be in an environment in is duration of unemployment is going to be longer and longer and longer. So if you do get the axe, it's going to be tough to find a job. That's my big fear for 25.
So the other thing to think about is, Trump's policies. If he starts deportations, that will theoretically open up more jobs.
For sure.
Right. However, if he's cutting the government, that
Yeah.
will reduce the jobs.
Yeah, it'll be very interesting to see. Again, the first 6 months, the next 2025 is going to be, I think, a tale of two halves,
Yeah.
right? Because there's not a lot of stuff that will happen in the first half, but we will start to see impacts, good or bad, in the second half. And
Yeah.
and I
I
just don't
agree.
know which way it goes.
Yeah, I agree with that. I don't think there's a whole lot he can do. I mean, there are some things he can do, like energy. He can
Oh
do some
yeah,
things there right away,
yeah.
and
But
that
we won't
goes.
see it in the economic numbers until
No, we
Q3.
won't see that for a little while. But energy goes through the whole market. It goes through everything.
Very true.
So,
Very true.
I mean, it will have a fairly quick impact, although it may not be the first quarter. Could be
Hmm.
towards the tail end of the second quarter.
Right. I
And
agree.
we might actually be in a contract. We're already in contraction with manufacturing. That was another theme that
Yes,
a
for
number of
sure.
the presenters talked about. Two things that almost all of them talked about. Number one, manufacturing is
Hmm.
below 50, which
Yes.
is contraction.
Hmm.
The second one is valuations. Forward valuations are at 22, which is very high
Hmm.
for the S&P.
Okay.
Now that doesn't mean they can't stay there for a while, but they can't stay there forever.
Hmm.
Eventually
Well,
something's
again,
going to.
a lot of people think valuations at 22, they have to come in. The other answer is they could grow into that,
Yes, that's right.
right?
Yeah,
Their earnings could grow.
the earnings could grow, but they're going to be challenging. To grow the earnings is going to be very challenging. The earnings
Correct.
up to this point, they've been exceeding lowered expectations.
Correct.
So will Wall Street continue to lower expectations so that they can continue to exceed?
Hmm.
I mean, there's only so far you can go with that.
Yeah. Very cool.
So on that point, I'm going to show a chart that I showed last week, and I'll show you how it's changed this week.
Hmm.
And that's the risk on, risk off chart right here. It's under the sentiment section. And so this is, it's a little bigger.
Thank you.
All right. So junk bonds versus 20-year treasuries, that's still going down fairly rapidly.
Hmm.
So that's the ultimate in versus risk on versus risk off.
So again, just to translate this is saying people are moving money into riskier assets.
No, they're moving. If it's trending down,
So
then the
they're
second piece
got it.
is outperforming.
So
So
they're
if this is
moving
going
out of
down, that
risk.
means they're
Got it.
moving money into 20-year treasury bonds
Got it. Got it. Okay.
and moving them out of junk bonds. You can see
Got it.
they had been moving them into junk bonds right up until middle of November, and
Yeah.
then it went down a
This is
little
an
bit, and then it went
interesting.
down a lot.
Well, this is an interesting chart. So what I've seen in this market is, and I guess it makes sense. What I'm seeing in the junk bond market is actually the spread is tightening, which
Yes,
makes them less interesting,
right.
right? So that could
Yes,
mean that could
that's
be a
right.
reason. It's like I don't know what the numbers are. Let's just say a 20-year treasury is 4%. Maybe 6 months ago a junk bond was 8, where
Right.
today it could be 6. And it's like,
Yeah, and that's essentially from a high level. That's basically what this chart is telling
uh
you is
gotcha,
the
gotcha.
spread.
Okay.
Basically tells you the spread.
The
It's
spread's
not.
coming in. Got it.
It doesn't use the numbers from the spread, but it translates to the same thing,
Yeah, that makes sense to me. Okay.
right? Now, also, you got investment grade corporate bonds versus 7 to 10 year treasuries, so a little shorter term
Hmm.
treasuries, and that went down a little bit, but not really too much.
Yeah, not much. Yeah.
And then if you look down here, high yield, this goes even shorter duration.
Hmm.
That one's kind of static, going right across. And then the ones that I watch at this point of the year, and I mentioned this in 2021, that these were all going down as the market was going higher. You can see the market's been going higher. So
Right.
keep that in mind in context with all of this. The market has been hitting new highs up here. Growth versus value.
Hmm.
If you take it from the peak over here, it's down. But if you take it from September, it continues to go up. So the last quarter, money's moving back into growth
Interesting.
and out of value. So at first I thought maybe Wall Street was repositioning into value, getting out of riskier
Hmm.
assets, getting out of the aggressive areas and back into the more defensive areas. But it not only is it continuing to go up, but it is accelerating up.
Seems to be, yeah.
right there. And then also discretionary versus staples. Now, the caveat to this is that Tesla makes up like 25% of this one sector, and Amazon makes up the other 20%. So those two alone is almost 50% of the whole sector. But
yeah,
even so, discretionary are things that we want to buy. Staples are things that we have to buy. And again, if it's going up, that means discretionary is outperforming. So again, that's risk on. There really isn't, people really aren't really that concerned.
Yeah, I like
They
it.
don't seem, they don't seem to care that the market is at all-time highs.
Well, hey, when the party's raging, you grab a drink, I guess.
Yeah,
Yeah.
let me go. I'm going to go to my newsletter real quick because there's something in here that I put in
Okay.
this weekend. I had my cartoons all about unemployment. Yeah, the robot saying next, the unemployment line. All right. So here's CPI next week. I don't have a forecast. I don't know if you've seen a forecast yet for next
I
week.
haven't. I'll well, keep going. I'll check right now.
Yeah, I'll look at CPI in a minute.
Okay.
This is the one I just showed you. We'll look at that in a second. This is the one right here. So this is a chart that John Carter in his session put up to talk about why the market could still continue higher and why it's while it looks similar to 2021, there are some differences to 2021 also. All right, so without going into the details of his technical charts, this is a monthly chart. All right, so it goes all the way back here to 2020. So it's slow moving, right? So we're in the beginning of December. So this last bar right here is December, but it's not over yet. So you don't really know where it's going to end. And these bars at the bottom are momentum bars. And this is something that he uses to trade options.
Got it.
It's a combination of the dots down below, which tells them when to get in, and the bars, which tells them momentum or tells them when the trend is rolling over and about to stop, when the trend is starting to decline. If we look at 2021 back here, whenever these bars turn dark blue, that means they're shorter or smaller than the previous bar.
Oh, God.
That means momentum is declining. All right, and you can kind of compare that to what actually happened in 22, which was a bear market, right? And then it went negative down here. Momentum went negative, which is across the bottom. And then when it turns yellow, it's first starting to go up. So momentum is starting to increase, even though it's not positive yet. It's still starting to increase, and that happened right through this period.
Oh, inflection points. I love looking at inflection points.
Exactly. Yeah. But the point he was making with this is, if we look at December of 21, and if you remember, that's our very first session here was December of 21, December 30th, I think it was.
Nice.
Of 21, and that's when I said, all of the indicators were showing that the aggressive Wall Street was moving out of aggressive and into defensive, moving out of growth and into value, and out of discretionary and into staples. They were positioning themselves for a down market the next year. Well, that's reflected in his chart as well. So this first blue bar right here, remember, this is a monthly chart. So this first dark blue one was November of 21, when the market was still hitting all-time highs. And the second dark blue bar was December, when the market again hit all-time highs, and everybody that had been in all the way after COVID. So this is 2020. This is the bottom right here from the pandemic. And everybody was trading. Everyone was staying home trading. Everyone was getting Robinhood accounts. And they didn't think they could ever do any wrong.
Yeah.
They were brilliant traders. And December was the peak of that. That's when everyone was in.
Yep.
Well, look at the bars. Momentum, and this goes back to what I was saying about the underlying components can tell you what Wall Street's doing, even before the retail traders actually start to see it or feel it. All right. So in addition to what I showed, the aggressive versus defensive, his charts showed the same thing. It started in November, continued in December, and then beginning in 2022 in January, it just continued to fall all the way down through till October was the low. right there. All right, so now let's compare that to now. What does it look like right now? Well, I don't
Yep.
see any dark blue bars.
Okay.
In fact, momentum is continuing to go higher. Now, granted, this last one right here is December, and we're not done with December yet. So theoretically, this could turn into a dark blue bar by the end of December, right? But what he says is, I want to see two of these before I know that the trend has changed.
Okay.
All right. So he got two right there, December of 21. He knew the trend had changed and he switched everything to bearish positions. But we're not seeing that yet.
Okay.
And this is pretty much what most of the people said. Everyone said things are bullish. I don't see any reason why they can't continue to be bullish. There's no reason right now to get out. But everyone then qualified that by saying, but that could change very quickly.
Right.
And the reason it could change quickly is because of that question about who thinks there'll be a recession, and nobody thinks there will be one.
Yeah.
So there's everybody's in, which means it could be any kind of catalyst can switch it to the other side, and then everyone will rush to the door and try to get out at the same time. So in conclusion, we can continue higher. I think we will. I think we will to the end of the year. I think we will into January because that's when all the big mutual funds rebalance. And then we have to be careful.
Okay.
And I think we're going to have a decline in the market, but I don't think it's going to be a crash.
Okay.
I think it might look like 22. Might not even be as deep
Well,
as 22.
22 is a pretty painful year for some.
Yeah, 22 was a painful year, even though it never really went below the uptrend. It never broke the uptrend. Even though, yes, it was painful. And if you were in it, and stayed in it from the beginning, it was painful all the way to the end. But from a long-term perspective, and this is a monthly chart, this is long-term, it never broke the trend. So, and that's a statement that I keep going back to. We go back to the homepage, which is available to anybody, and look at the cyclical bull and bear markets. This is the 22 bear market right there. It never broke trend. So this long-term 18 to 20 year secular bull never broke there. It never broke, even though it went down, it didn't close below it for COVID. And we're way up here right now, but we could easily just come right back down to this line, which would be as painful as 22, by the way. But we don't have to come down to that line. We could come down to the support line right here, which will still be painful for those that don't know these things and stick with it. And their broker says, oh, it'll always come back. They'll have to go through that pain, and it will eventually come back, but just depends on how long you want to wait for it.
Yeah.
So that was the overriding themes that I heard during the conference. Things are bullish. There's no reason they can't continue to be bullish. They probably will for quite a long time. There's lots of reasons why it should be. But it's not going to go straight up, and there will be periods where it will pull back again. And I think that'll probably be early next year. Will be one of those periods before we resume higher. Now let's look at next week. CPI.
Yeah, well, we'll go to CPI after this. Just do a quick flash on Bitcoin. Your calls the last couple of weeks have been omniscient almost. So I'm just curious what you see in the charts.
Okay, so, oops. Let me zoom in on this. So when Bitcoin was right up in here, I said it's probably going to pull back, probably to somewhere in the middle of this consolidation right here.
Yep.
And I picked 90,000 because it was a nice round number.
Yep.
Right.
Nailed it.
Went to 90,700. So not quite, but pretty close.
Yeah.
And then it started going higher. And these are Fibonacci levels, by the way. Which I went to a session on Fibonacci's, and it just confirmed that I had done this correctly.
Nice.
And that means the target was 1025. You can see right here it went up in this one day. Actually, let me show you this one day. It's pretty amazing. This one day right here, the high was 104, and the low was 91. How would you like to be riding that day?
It's also trades 24 hours a day. So yes, it's
Yes, that's true. Yeah.
pretty
But
crazy.
91 to 104. But it's really interesting. So the Fibonacci levels, it's not something that I just came up with. This is something that every trader out
Yep.
there that uses technical analysis, they all know that number. They
Hmm.
all know that 102.5 number. So guess where they had their sell orders placed.
Yeah. There you go.
Yeah, that's why it blew through 102.5 and then went right back down again. The next day, the high was 102.088.
Hmm. Nailed it.
And then it started coming down from there. Now, I think it's probably going to go sideways. I think Bitcoin is going to be bullish just like the rest of the market.
Okay.
I think if the rest of the market cracks, then Bitcoin will crack as well.
Oh, for
But
sure.
right
Yep.
now, I mean, it's as bullish as everything else is.
Yeah. Very cool.
Let's look at MicroStrategy. MicroStrategy,
Yeah. Hmm.
Sailor,
Sailor, Michael Sailor. Yeah.
Michael Saylor. So they're a software company, and I
Well,
remember I
they used to
remember
be a
that back.
software company.
Well, they still are, but back when you and I, were selling software,
Yeah. Yeah.
they were kind of a competitor in some places.
Kind of.
It was analytics software, essentially
Yep.
business analytics.
Hmm.
But he decided to reshape his whole company around Bitcoin. So all of the
Yep.
profits that he makes from his company and selling software, he puts into Bitcoin. And I don't really understand what he's doing, but he's doing some kind of crazy arbitrage stuff with Bitcoin, just trying to. Yeah,
Well, he's
I'm a
issuing zero coupon bonds and using those to buy, and
right.
yeah,
Use those to buy Bitcoin.
yeah,
It's almost
which
like
makes
he's
Bitcoin go up, and yeah, it's weird.
yeah, and Bitcoin will go up until it doesn't, and it kind of reminds me of cornering the silver market back in
Yeah,
the
the Hunt
80s.
Hunt brothers.
Hunt Brothers,
I spoke about that this week. Uh, yeah, people, if you don't know about what the Hunt brothers at one point had over 30% of the silver market with futures contracts,
right?
and they were the market,
I
and
didn't
then
even,
they
I didn't even
weren't.
watch your session.
Yeah, no,
And
good
it
job.
reminded me of the Hunt Brothers.
Yeah.
But right now, it needs to rest.
Okay,
Basically, it
so
made its run.
sideways.
It made its run to 102.5, which was everybody's target. Lots of people are going to get out because it hit the target. There people will get into because they think it's cheap at at what is this is MicroStrategy, but
Yeah, it's at
this
100,
looks very
just under
this looks like
100,000.
the
I
bit
just checked.
this looks like the Bitcoin chart, but I think it needs to go sideways for a while. So we'll
Okay.
see how far that goes.
Very, very cool. Well, let's talk about CPI. I do have forecasts for you.
Oh, you do? Okay,
I
good.
do. Headline is expected to go up. Last month was 2.6, expected to be 2.7. Core is
Interesting.
actually expected to go down. It was 3.3, is now expected to go to 3.2.
Very interesting. So this is the base effect, the 12-month average. You can see the December report it's actually is kind of a small one,
Mm-hmm.
relatively. It's a little bigger than last month, but it's not as big as the coming ones, or not as
Yeah.
big as the previous 2 months, where CPI dropped quite a bit. And last month it was very small and CPI went up. So it went from 2.4 to 2.6. This next one is not a big one. It's not a real small one, but it's
Yeah.
I thought CPI would come in flat. I'm still going to say flat.
Yeah. So the
I'm still
headline
going to
again is expected to go up to 2.7, is what they're saying.
okay. Well, we'll
Yeah.
see.
Yeah.
I'm
And I
I'm
think
still
it's
saying
food. Dude, it's food.
yeah,
It's
probably is food.
yeah.
So here's core was at 3.3, so that's going
Yep.
to stay 3.3.
3.2. Yeah, that goes down.
Well, that's interesting because one thing that I've noticed
Mm-hmm.
is this charting software takes the actual number,
Mm.
whereas I've noticed that the government reports it,
Mm-hmm.
they basically chop off the last decimal place.
Yes. Yeah.
So if it's 329, they call it 32.
They don't round up. Yeah. They're
They don't
just
round
just
up. Where this might be closer to 33.
yeah.
So
Okay.
so if, so let's say it was 2.29,
Yep.
and it stays at 3.31.
Right.
So the report will say it's staying at 3.3,
Yep.
basically.
Okay.
Or 3.2. Wait, was it 3.2? Yeah, 3.2
Yeah,
last time.
they're saying it's going to go down to 3.2. It
Okay.
was
All right.
3.3. Yeah.
Okay, I got you. Yeah. So this is the last one.
Correct.
Okay, so this is down to 3.2. So I would agree with that.
And
Um,
again, for folks that don't recall, core does not have energy or food.
right.
So
That's correct.
that's the big difference.
And if we look at commodities, DVC is, I actually put the arrows in here for the month that it's going to be reported on. So next week will be for November. So this is shaded area.
Mm-hmm.
So DBC is basically all of these various commodities. So it's energy, food, metals. It's a little bit of everything. And that actually went down. Here's the food one.
Mm-hmm.
You can see 25% of it is cocoa. And that's the one that went up the most right there.
Mm-hmm.
CRB went up also, which is mostly agriculture, but also includes energy. So for core, this basically is the one with, except for the metals. I mean, metals is 20%, but the rest of this are the things that are left out of core
Correct.
right there. So even though this one went up, the core number will not reflect that.
Mm-hmm.
But oil and gas went down slightly. Not very much, but it went down a little bit.
Mm-hmm.
And that's also energy. So if you take this one here and this one here out, that's actually most of this one, actually all of this, yeah, pretty much.
Mm-hmm.
That's what core will be reported on. But I mean, the commodities, I don't know, they're mixed. Let's call it mixed. Some of them went up, some of them went down.
Right.
Oil and gas is the one that affects most,
Yeah.
consumers more than anything else.
Yeah. Well, let's tie this together, right? Because again, folks, the jobs market, is still growing. We've got CPI again. Let's just call it tame, not racing higher. The odds are, I reported this morning. I think the odds are 87% that the Fed's going to cut in December. Does
Yeah.
that feel a little aggressive, or do you think it's that kind of number?
No, I absolutely think they will cut. I haven't changed that opinion. I
Yeah,
think they're
me
going to
too.
cut in December.
I think that.
It's almost to the point where they might look bad if they don't cut.
Yeah, I agree. I
So,
agree.
but they will also say that's it. So in their press conference and his talk, he's
Hawk,
going to
hawk,
say,
hawk. Yeah.
right, we're going to cut because and now we think that everything is normal.
Now
We
we
have
need
finally
time. Yeah.
we finally get back to normal, the place where we want to be. So we will not be looking at cutting or raising for a very long period.
Yeah.
He won't give a time frame, but the implication will be maybe all the way through
Multiple
next year.
meetings. Yeah, it'll be
Right.
multiple meetings.
Yeah.
Yeah. I agree.
So I think the market's expecting that. If that happens, then I think small caps will benefit.
Okay.
There's small caps right now. I mean, they've already started going up. They pulled back here lately. This is another thing that John Carter mentioned. He showed all of the indexes, the Dow, the S&P, and the Nasdaq, all significantly higher. The only one over a long period that, and it's basically is this blue line right here. The only one that really hadn't broken out as significantly as those was the Russell, which is small and mid caps. He said the Russell, it's time for it to catch up.
Yeah.
He said
I've heard
this
that.
one could go higher very quickly.
Okay.
So, one last thing, and I'll go back to the newsletter. I would encourage anyone reading the newsletter to take a look at this Real Investment Advice, RIA. I put the link right in here. Do indicators support bullish outlooks? It's a very interesting analysis, and especially this. So I excerpted some of it, but especially this part, portfolio rebalancing risk. And he gives the numbers here. S&P is currently up about 28%, while U.S. aggregate bonds are up only 3.2%. that differential in performance would cause a 60-40 stock bond allocation to shift to 65-35.
Oh, interesting.
So in order to get it back to 60-40, portfolio managers will have to sell 5% of their equities just to get back to a 60-40 balance. That I thought was very interesting.
Yeah. I mean, that could be some forced selling. I don't know how big that market is, but that's
the kind of thing that could happen very quickly, in a week or two.
Right.
And they could then go right back into those beginning of January.
Got it. Okay.
But this is something that really needs to be watched, I think, in the next couple of weeks to see if something like this is actually going to happen.
I like it. Well, do me a favor. It's going to be an exciting week. Show your website one more time.
BreakpointTrading.net, and the YouTube channel is right up here. I will resume on Monday.
Nice.
Doing daily.
After market close, right?
After the close, it'll come out at 7 at night.
Schedule.
It's funny.
7 Eastern.
7 p.m. Eastern. Sorry. This friend of mine watches it. That in our community watches the YouTube channel, sure. And she golfs with my wife. And they golf together this week, and she goes, "Oh, I love Dan's YouTube channel." Because I used to keep clicking to see when it was available, and then he told me it's set for 7 o'clock. So now I know it's 7. She goes, "But my husband goes to bed early." She goes, "And I'm so glad he does because I can just stay up and watch Dan's YouTube channel."
That's awesome. I love that you're doing it. I love that you took the leap. Long time coming. I think you're going to have a lot of fun and have lots of amazing fans.
Yeah, it's already fun, and I love the comments and people asking me to, hey, look at this and look at that, which I try to do whenever I can. And I'm doing Technical Tuesdays now. Every Tuesday, I take one technical indicator that somebody, a subscriber, asked me about, and I'll focus in on that one. Last week I did John Carter's squeeze.
Yes,
which was interesting. I actually learned a little bit more about it this week. So every Tuesday I'll take some indicator and people will tell me what they would like to see. And I've got a list of them right now. So every Tuesday we'll do that.
Oh, that's so fun.
It's already fun. I've got, I haven't looked today, but there was almost 500 subscribers.
Oh, we've got to get you over 1,000, folks. Do me a favor. Go to breakpointtrading.net, click that blue button, YouTube channel, and subscribe. We've got to get Dan over 1,000. He does the work. Let's show him some love. Do that today. Click the YouTube channel.
Go click on there today.
There you go. All right, buddy. Take care of yourself.
Yeah, it's fun. Oh, by the way, one more thing.
Yep.
One more thing I want to tell everybody about. For those that are annual or monthly subscribers to my website, every month I do a Zoom call with subscribers where I'll walk through new things I've added to the website, or I'll answer questions about how to use the website. And then I just open it up to the audience. And it's interactive, and anybody can ask me anything they want. We'll talk about, the market, the election, whatever they want to talk about. Individual stocks, we'll bring charts up and look at them. I'll explain how indicators work, whatever people want to talk about. And then they all get posted on here. You can see right here, here's November. It was 2.5 hours long.
Wow.
So anyone that is a annual or monthly subscriber, I will be doing this on Sunday next week, a week from today.
Nice.
At right after our call, actually.
Okay, so 11 what Pacific?
Yeah, it'll probably be 2:30.
Okay,
it will start.
Okay,
Eastern time, and then we'll just go till however long we can, or till my wife comes in and tells me to stop.
She comes in and says, "You're done."
Right.
That's funny. All right, bud. Take care of yourself. Have some fun.
All right. Have a good week.
Thanks.